Okay, so we're going to do one more 1040 easy before we start talking about the 1040As. Okay. We did one of these last week, but I just want to make sure we're all good on this. So you'll need one blank 1040 easy form. Okay, so the first thing when filling out your personal 1040, it's probably too dark, okay, is that we need to make sure we put our name on it. I'm just trying to find it better. Okay. Well, in this case, the name we're using is Lori Tensor, who is single. So we're going to put Lori Tensor. You'll put your social security number, but in this case, we're just going to put zeros because we don't know Lori's social. Okay. She's not married, so we don't have to fill out her spouse's information. And then if this was your actual, you would put your address and your city. If you work in another country, you fill out the foreign country, province, and name, but you don't, so we don't have to worry about that. If you want to donate to the presidential campaign election, you check this box. If you don't care to do that, you don't have to. There's no penalties on that. Okay, the next thing we need, okay, so on her W-2, she's got federal income tax withheld, wages, state income tax withheld, and bank interest. Since we live in Florida, we don't have state income tax. So we would never have to worry about that. There are other forms that you fill out if you have state income tax, but we don't do that here. But and those get sent to the state, not for federal. So it's two separate filings that you have to do. But what we need is her federal income tax withheld, her wages, her interest, and that's all we need. Okay. So her wages go right here in this first box one, $21,265.50. Now, if you are filling out your electronic taxes, it won't take the change. So you actually round everything. So the 5 would actually round this up to 266. But since we're doing a paper, you can actually put the change in. Taxable interest. Okay, that's her bank interest. Now you can have bank interest and fill out this form. It just can't be more than $1,500, and it can't be from more than one bank. Okay, so that's your bank interest, one bank only. And her bank interest was $293. So that goes right there on that line. Okay, I'm going to put number 32 right there so that when I scan this later, you guys will know which one it is. Okay, she did not have unemployment compensation. So you can put the zeros in there or you can leave it blank. I like to put zeros, but that's just me. Then I know I made sure I looked at every single line. Excuse me. We're going to add these 3 lines together. And we get $21,558.50. This is the adjusted gross income. Okay. Now, if somebody else claims you as a dependent, you check the box. So if somebody claims you, like your parents, say for example, still claim you, you would check the box you, and then it says enter the amount from the worksheet on back. So if you look at the back, dependents that check this box. So right now, you put in your line 1 amount plus 300. Minimum standard deduction. Enter the larger of lines A or B here. You'd have to work out this worksheet. Okay. We're going to pretend your parents don't claim you. So if no one can claim us and we're single, we're entering 9,750. But we're not pretending you. We're sending Laura. Lori doesn't get claimed. This amount gets subtracted. Okay. So minus 9,750. And that's her taxable income. Okay, federal income tax withheld comes from the tax that was taken out of her check. So 1,131, that goes right here. Okay, earned income credit. She doesn't have kids or anything. We're not going to worry about that. Well, if you have kids, you can't fill this out anyway. There are other qualifications for earned income credit, but we're just not going to get into those right now. If you don't have kids, a lot of people don't qualify for this. So 8A, we put a 0 there, and B. We add lines 8 and 9. That gives me a 7 and 8A, sorry. So add those together, and I get 1131. Now, tax. We use the amount from line 6. That's this amount right here for calculating our tax. And we're going to the tax table. So we find in our tax table 11,808, which is going to be on page 81. Nope, sorry, 80. Right here, 11,800 to 11,850. Her tax is 1,339. Okay, her tax is 1,339. She has paid 1131. She underpaid. That means she's going to owe. So it says here if line 9 is larger than line 10, you get a refund. Line 9 is not larger than line 10, so you skip and go down to line 12, which says if line 10 is larger than line 9, subtract. So I'm going to subtract 1,339 minus 1,131. And Lori's going to owe $208. Now this is due by April 15th on tax day. So when you file your taxes, if you owe money, you're supposed to send this check in at the same time. Unless there's there are forms you can fill out for making payment arrangements. So if it was an amount you can't afford, you can try to make payment arrangements, and they usually accept those because they want to get their money.
Can you write the check out?
You make it out to the Internal Revenue Service. There should be a, yeah, for details on how to pay, see instructions. There's an instruction PDF or booklet that you can get online that'll tell you exactly who to make the check out to, exactly what information needs to be on the check. Or if you're going to pay with like an electronic funds or credit card or something like that. I don't recommend paying with a credit card. The debit card, sure, but you don't want to pay interest on taxes.
No.
Right? I mean, don't recommend that at all. The 1040EZ, you can't have kids. You can be married, but you have to file together. And you can not have kids. You can have bank interest, but no stock dividends. and you cannot itemize. With the 1040A, sorry, you're allowed to have kids. You don't have to file together. So if you're married and you want to file separately, you can. And you're allowed to have stock dividends. But you still can't itemize. And itemize means that you list all of your allowed deductions in order to maximize your tax deduction. Okay. So Kenya and Rob and Elmar are married and they have a kid. She's a pharmacist and he's a store manager, or vice versa. Pretty, I don't know which is which. Well, Kenya and Robin could both be a boy or a girl name, couldn't it? So one of them is a pharmacist, the other is a store manager. They've got their W-2 forms. They got $987 in interest on bank accounts and $1,200 in stock dividends. They figured out that they don't have enough deductions to itemize. So they're going to use the 1040A. And when you talk about the figuring out, you get a standard deduction. So if we look at our 1040A form, so why don't you guys go ahead and find one of those in the file I gave you. For 1040A, if you flip it over, see how it has here standard deduction? Okay. If you're married filing jointly, your standard deduction is $11,900. The deductions that you itemize, you would want them to be more than $11,000 in order, well, more than probably $12,000 almost, before it would be worth taking the time to list them all versus just taking the standard deduction. Does that make sense? So that's why when they said they determined they didn't have enough deductions to itemize, whatever they could itemize didn't total up to more than this $11,900. Okay, so that's right there. So what will happen is when you don't have enough items to itemize, but you do have a kid, you fill out the 1040A. So we're going to go ahead and go through this one for these people. So if you look at their W-2s, just going to kind of go back and forth between the computer and the paper. Okay, if you look at their W-2s, we have $65,120.97 and $52,126.76 as their incomes. Okay. First thing we want to do is we're going to fix this part. Kenya, Robin, I have no idea who's who. Strangely enough, they have the same social security number as Lori. Okay. Of course, you'd fill out the address and all that. Now, they're going to be married, filing jointly. Again, married filing separately is when two people don't file together for whatever reason. Head of household is if you're unmarried but you have dependents. And qualifying widow or widower, there's, you know, your spouse has passed away. Exemptions. You always claim yourself. If you're filing together, you claim your spouse. And then they have one kid. That child's name goes here. Their child's name is kid because they weren't very creative. That child's social security number goes there. We'll just say it's a son, daughter, whichever. If they're under 17, you click that, check that box. Then you add up how many of these you have. 1, 2, 3. 6A and 6B, there's 2. 1 child that lived with me. Then you can have did not live with you due to divorce or separation. There's instructions for that. Or dependents that are not entered here because you ran out of room. So you have more than 6 kids, you have 7 kids, you have another paper you have to fill out. That goes here. Those get added together, and they have 3 exemptions. This will become important in a little bit. Now their wages, if you look on their W-2s, they've got 2 different W-2s, so we gotta total up their wages. So we add them together. So this was Robin, this was Kenya. So when you file together, your whole amount of total wages goes on the same tax form. Okay. Now, taxable interest. It says attach Schedule B if required. I'm going to show you, we're going to go over the Schedule B really quickly. It's not going to be required on this one, but I just want to make sure you're familiar with it. This is the Schedule B. Now the Schedule B has 2 sections. It has, well, 3 sections, sorry. Part 1 is interest. Part 2 is ordinary dividends from stock. And then Part 3 is if you have foreign bank accounts. You only have to use Schedule B if you have interest from one bank and you have stock dividends from one company, then you don't have to use Schedule B. You only have to use Schedule B if you have multiple bank accounts that paid you interest or multiple stock companies that paid you dividends. If you just have one, you just list, you don't have to list it all, you just put the interest on here. And then you do have to use Schedule B if you had over $1,500 in taxable interest or ordinary dividends, had a foreign account or received a distribution from or were a grantor of a foreign trust. Okay. So, multiple bank accounts, multiple dividends, or if you have more than $1,500. Okay. So when we look at their at the initial example problem, it says that they received $987 in interest on bank deposits and $1,200 in stock dividends. But it doesn't say that they had it from more than one company. So we're going to assume it was just one company. So their taxable interest is going to go right here of $987. Okay, their tax exempt interest, well, we didn't have any of that. Okay, ordinary dividends, they had $1,200. Again, only if more than one company or over $1,500 that you have to do the Schedule B. Okay, qualifying dividends, we don't have to worry about that. Capital gain distributions, they're not going to have that. IRA distributions, this is if they're retired already. and then there's a taxable amount of it. Then you have pensions and annuities again. This is if you're retired. So for a long time, you don't have to ever worry about this section. Okay. Unemployment compensation and Alaska permanent funds dividends. Now, if you do go on unemployment, they'll send you a 1099, and that goes here. And then our Alaska permanent fund, that has to do with being an Inuit. So most people in Florida especially would never qualify for that, right? Social Security benefits, this is like disability or retirement. So again, for the most part of your life, you'll never have to worry about those lines at all. Okay. Then we add up every single thing. I'm going to go ahead and fill these in with zeros because we didn't have them, and I like placeholders, so I know that I took care of those lines, but you don't have to do that. You can just leave them blank. So when I add their income and their interest and their dividends, they're at $119,434.73. Okay, educator expenses. This is some ways to adjust your income. This is for teachers, and it's a maximum of $200. And it's for things that you spend money on for your classroom out of your own personal pocket. IRA deductions, that's if you're having money taken out of your paycheck to put into your retirement account. Student loan interest, see instructions because certain types of interest can go here and certain types can't. You're going to get a 1098 form for this. Okay. Or from, not from school, from the lender. Tuition and fees, you'll get a 1098 from school. Okay, so if you pay tuition or fees, and then you also, on this one, you have to fill out an extra form, 8917, if you're deducting college tuition. Okay, at this point, we didn't have any of these, so we have no adjustments. So the adjusted gross income is not actually adjusted. Um, 18 and 19, you only have that, well, 19 you only have while you're actually in college, 18 you'd only have until you paid off your student loans, 17 if you have an IRA or not, 16 is only if you're a teacher. Okay, now, once you have this amount, this exact same amount goes on the very top of the next page. Okay, you just carry it over. None of you will ever have to check this box that you were born before 1948. They might change, but I don't remember it ever changing in my lifetime. Or if you're blind, you might have to check that box. And makes your retirement age. Okay. So if you put the number of boxes there, if you are married, filing separately, and your spouse itemized deductions, you have to check there. But if you're filing together, it doesn't matter. Okay. Enter your standard deduction. Because you're not itemizing with the 1040A, that's when you come over here and you look for your standard deduction. They're married filing jointly, so it's $11,900. Okay. If you're single, it's $5,950, and if you're head of household, it's $8,700. Now, subtract line 24 from line 22. Okay? If your standard deduction is more than your income, you end up with a 0 here. You can't have negative income. So let's say your standard deduction is 11,900, but you only made 11,500, then that's going to end up being 0. But in this case, they made considerably more than that. So we're going to deduct that 11,900. And we get 107,534.73. Now remember where I said exemptions, that number we put in the box up front is going to become important. That's the number from 6D. Our line 6D had 3 people on it, right? So 3 times 3,800. Which is 11,400. And we get to subtract that now. So 107,534 minus 11,400. And their taxable income has been reduced down to 96,000. And this is when we go to the tax table for line 28 to find out their tax. So we'll find our tax table. And your tax table goes up to 100,000. So we're luckily in that range. Otherwise, we would have had to use one of these calculation tables. So they're at 96,134. 96,100 to 150. Married filing jointly, so they're in the second column. So $16,091 is their tax. Care for child and dependent care expenses. If you pay for child care expenses, you can fill out this form, and some of that is deductible. We're just going to pretend that their kid's a teenager and doesn't need that, and their parents aren't getting care. If you have elderly parents that you pay for, you can fill out a Schedule R. Education credits. Well, they're not in school anymore, then they're not retiring. Child tax credit. This one has income restrictions, but always look at it if you have kids, just to see if you qualify or not. Okay, so we're not giving them any total credits, so we're kind of ignoring that part of the process right now, just because there would be so many forms to fill out for you guys. Trying to minimize that. But those credits get directly deducted from your tax. So if you do qualify for a child tax credit, and let's say you get $2,000, it would come out of this $16,000 that you owed, so then you'd end up only owing $14,000. So credits are nice. You do want to see if you qualify for them. Okay, federal income tax withheld. We go back to the W-2s, and from Robin's check, they withheld $8,765.99, and from Kenya's $6,198.65. Now we're only looking at federal tax, not Social Security or Medicare. Okay. Social Security and Medicare, you don't fill out any kind of tax forms on those. Just that money just goes away until you get old. You don't get it back. 25 through 37 odds. And that will require you to fill out some 1040 EZs and some 1040s. A's, 1040 A's. And if you didn't do your project today, you need to do it tomorrow.